is not Mr. Price's first rodeo overseas. It has tested markets in Australia, in Poland, and in several African countries, and it didn't work. Its move now into Europe, which is already a saturated market, is likely to be a bumpy ride.
Europe has had a very, let's say, underperforming economy. If you had to look from European per capita GDP from basically 2008 till now, it's only very recently become a bit higher than it was back in 2008. And so we are looking at a pretty weak economy. And Germany is one of the laggards in the European economy.
Mr. Price said it would pay $568 million for NKD and lost almost the same amount in share value on the JSE, all in 1 week. The markets are still uneasy about this deal. The group's largest shareholder, 361, criticized the board's decision, calling for an explanation as to why Mr. Price would acquire a company that has been recording losses, and why it is following South African retailers that have a history of value-destructive offshore acquisitions.
Investing abroad is always risky, and there are many examples where South African businesses invested abroad and where they were not that successful. But the reality is that if you have a lot of money available and you want to expand your business, then some markets, like for example the European market or some other markets, are quite attractive.
In half-year results out last month, Mr. Price showed strong gains with revenue up 5.4% and its profit up 6.3% to $423 million. It grew retail sales 5.5% and increased its retail footprint to 3,100 stores. The Mr. Price Group is now betting on NKD's more than 2,000 stores across several European countries for future growth.
This is a successful investment, which let's hope it is. Then it will be good for Mr. Price because over time they will receive a lot of dividends. They will make money out of this investment. And if they do well, then of course the South African economy will be doing well as well.
Several South African retailers have travelled the international route looking for growth opportunities, largely due to weak growth and policy uncertainty domestically, but found it to be just as difficult. If this deal goes ahead, the NKD acquisition will be another test for Mr. Price, either as a growth engine or a costly gamble. Sumitra Nadi, CGTN, Johannesburg.